Good morning. Welcome back to BT. When it comes to money moves, are you a total pro or are you amateur? Well, this morning we're putting our investing know-how to the test with friend of the show and financial expert Shiraz Ahmed, who is a pro.
I like to think so. I appreciate that. Thank you.
But when it comes to it for pros versus amateurs, what's the biggest conversation that you generally have with your clients?
Well, I'd say the biggest differential between a pro behavior and amateur behavior is really the focus on risk versus return. Pros typically are always hyper-focused on, okay, what is the risk in the market? What is the risk in this investment? Versus amateurs who tend to focus really solely on what is the return of X, Y, or Z.
So is that the biggest pointer for amateurs, is worrying about the risk, or do just leave that up to the pros?
No, I would say everyone should be considering risk. In fact, arguably more so than return. It's not just about what's going to make me money. It's also going to be what's going to come back and bite me. And that's really what you need to focus on.
Because does that happen, where you can just make money quickly? Like,
it does.
Can, but...
It can, but a broken clock is right twice a day, right?
Yeah.
So this is what we always want to be focused on, is not just what are we doing, why, and more importantly, what is the risk associated with it.
Okay, you have a few scenarios for me?
I do. So we're going to have some questions to go through to see, is this a pro behavior or is this an amateur behavior, okay?
Yeah.
All right, so first off, big tech and AI stocks are driving the market right now. Sure. Some investors are backing up the truck, buying as much as they can because they don't want to miss out.
Is that a pro move, or what are you thinking about risk? I'm saying that's a pro move.
That is an amateur move.
Oh.
So remember, right now, this is all about trends, craze. Right now, it's AI and big tech. A couple years ago, it was crypto. Before that, there was cannabis. There's always the latest and greatest thing. And so it's important for investors to not get caught up in FOMO and look at the rationales of why are they investing and what they're doing. Is this the right entry point or not? And what are the valuations associated with it? So there's a lot to go with.
0 for 1.
Next one. All right, next one. This is a common one. I hear this one every day. Many people believe that the S&P 500, which is the 500 biggest companies in the U.S., gives an average of 10% return every year and assume that will always stay the same.
That is a pro move?
That would be amateur again, my friend. So you have to remember that we're talking about 100 years of data that is averaged about 10%, but in any given year, that could be up 20, it could be down 30. So just because we have this normalcy bias where we're looking at what has happened in the last 10 years, we're coming off the back of the best decade that the markets have ever seen. So it's fairly likely and actually quite probable that we might start seeing some bad years.
And you're starting to see where I lie in the pro and amateur. What's your next one?
All right, next one. Investors aren't too concerned about how high or how low the market is. They just start contributing regularly a few $100s a month to their investments.
Yeah, that's pro, isn't it?
That is pro.
Come on.
There we go. 1 for 3, buddy.
There we go.
They're getting better. So again, this is more about, think of entering the markets kind of like double Dutch skipping. When do you jump, right? There's never really a great moment, so you just have to start at some point. And so there's a concept in finance referred to as dollar cost averaging, which is adding a little bit every single month. That way you're not trying to pick your entry points, you're just kind of averaging your way in. Okay?
Next one.
Next one. All right. Your investment approach has a home country bias, investing disproportionately, let's say, in Canadian companies like banks, energy, and or mining.
Amateur?
That is correct. So again, Canada is, I'm a big proponent for investing in Canada, elbows up right now. It's a hugely important
and keeping your money here.
Absolutely, as much as possible. But we also have to remember that when it comes to investing, Canada accounts for about 2 to maybe 3% of global GDP. So it's a fairly small market compared to the globe. So to be truly diversified, you need to have some of your money in Canada, but also abroad as well and in other asset classes. So it's important to look at the whole big picture. Okay.
2 for 2, or 2 and 2. Let me try it
All right, let's see.
On top here.
Okay. Question 5. So many people kind of skim headlines and buy and sell based off of what everybody else is doing.
Oh, that's an amateur hour right there, isn't it? Yeah.
That is correct. So again, we have to try to take emotions out of investing. It is literally the hardest part to do, and this is probably one of the most defining moments between what was amateur behavior versus professional behavior, is the fact that most professionals can detach. I mean, we're human. All of us get sucked in a little bit.
How do we take the emotion out of it?
Focus more on the analytics. Focus more on the metrics. Focus on data, because numbers don't lie, right? But human emotion, you can get sucked into sentiment, right? So the whole point is to try not to do that.
Any last words for anybody out there? Any amateurs like me that are trying to be pros or think they might be pros?
Look, there isn't one right way to do anything, so you have to find what's right for you. And if you're ever unsure, this is why professionals exist. I always tell everybody that you work with a pro in any time in your life. It doesn't matter what it is. It could be a plumber, an electrician, when you don't have the time, energy, expertise, or willingness to do it yourself.
Yeah, well, you're definitely a pro, and we always appreciate your thoughts on all of this. Where can we follow you?
Follow me on my website, sartorialwealth.com, or follow me on YouTube, Sartorial Wealth.
Yeah, congrats on the new edition, too. I don't think we've seen you since the new one has arrived, 2 months old. Getting some sleep?
A little bit. I wish I got a little bit more, but thank you.
Yeah, there you go. Cheers. Well, we'll see you in the next one.